Welcome back to Fair Fade Investing. Today we're taking a look at Apple Incorporated, ticker symbol AAPL. We've got price per share of $186.98, market cap of $2.89 trillion, enterprise value of $2.87 trillion. Apple is one of the largest companies in the world. Broad portfolio of hardware and software products targeted at consumers and businesses alike. Apple's iPhone makes up just about 40 to 50% of its sales. And its other products like Mac, iPod, Watch are designed around the iPhone as the focal point of an expansive software ecosystem. Apple has progressively worked to add new applications like streaming video, subscription bundles, and augmented reality. The firm designs its own software and semiconductors while working with subcontractors like Foxconn and TSMC to build its products and chips. Slightly less than half of Apple's sales come directly from its flagship stores, with the majority of sales coming indirectly through partnerships and distribution. Looking at the financial strength, the first thing I'm noticing here is that for every dollar of debt, they have 55 cents of cash on hand to pay down those debts. Not the ideal situation. I'd like to see at least one here so that they could pay down the entirety of their debts today if they wanted to. Although we do see that with a 25.98% free cash flow margin, this is a high free cash flow business. So looking at this profitability, notice right away green bars all throughout their margins and returns. For their gross margin, or the money a business makes after removing the direct cost of goods versus the industry, they're in the 83rd percent. And versus history, these are the highest gross margins they've had in the last 10 years. When it comes to operating margins, or the profit after the cost of goods sold, including operating expenses like rent or utility costs, their maximum is 30.48 and their current is 29.82, so just below their 10-year maximum. The net margins, or total profit after all expenses, is sitting at 25.31, slightly below their maximum for the last 10 years. And their free cash flow is just around their average, or their median for the last 10 years. These give me some insight into how the business is doing, but to see what management strength is up to, I look at ROE, ROA, ROIC, and ROC. These numbers do look fairly strong. We've got triple-digit ROE, almost 30 on return on assets, 32 for invested capital, and triple digits again for return on capital. So versus the industry, we do see that these are outstanding numbers, and versus history, fairly strong as well, except for the return on capital, which is around its median, but still triple-digit number, large amounts of return. When we look at the price to earning ratio, we've got their current at 30.55, a median of about 17.7, a maximum of 40, and a minimum of 9 over the last 10 years. So I would like to see this closer to the median if I was going to be buying, although the price to earnings ratio doesn't tell us the whole story. There could be huge growth factors in this business that we can't see yet, but still 30.55 is pricing in a decent amount of growth for the business. Looking at the trailing 12-month revenue, we've got $383 billion of revenue versus a $2.9 trillion company. So the market cap is currently about 7.5 times their trailing 12-month revenues. When we look at their trailing 12-month data for revenue, net income, and EBITDA, we do see growth here through the start of 2022. And then it seems like a little bit of stagnation here in 23. Looks like net income is staying around that 100 million $100 billion level. The cash debt has remained fairly stable over time, with roughly $61 billion of cash and $111 billion of debt currently. We do see share buybacks here, although they are decreasing over time. Here we can see their operating revenue by business segment. So we've got their iPhone at 52.3% of the business, services as the next major chunk with 22%, their wearables, which is sitting at 10%, the Mac at 7.7%, and an iPad at 7.4%. So heavy dependence on the iPhone here, and the services as well. Wearables, which we see that they're having issues right now with the iWatch. So this 10% right here of revenue could be somewhat impacted, which is why there could be some fluctuation in price in the short term. When we look at geographic region, we see that the US makes up the majority with 36%. Europe is the next with 24%. China sitting at just under 20%. Rest of Asia, Japan, Americas, excluding the US. Here's a fairly good sign to see growth over time for historical operating revenue by business segment. So we see that the iPhones are fairly steady growing. The services are absolutely growing. The wearables, home, and accessories are as well. The services are very impressive here to me because that's where a lot of the large growth is occurring. And it's one of those things where their services you're somewhat tied to. To get a little bit more accurate insight into where the company could be headed and assess what's currently priced in, let's run a DCF. First thing I'm seeing here, business predictability is fairly strong. We've got 5-star predictability, so that's good news. We do have data for the earnings per share on the 10, 5, and 3 year, as well as free cash flow. We can see that over the 10 years, they've averaged 16.2% a year. Over the last 5, accelerated to 19.8%. And over the last 3, accelerated even more to 23.2%. So there is what appears to be acceleration in their earnings per share, probably due to the fact that they're buying back shares. When we look at free cash flow, we've got 14.1 over the last 10 year for average. We've got 18.6 over the last 5 years, so accelerating. And then over the last 3 years, a little bit of slowing back to about their 10-year average of 14.6. So starting on free cash flow, based on their 10-year growth rate, then we see that a fair value would be closer to 132.34. So let's see what's currently priced in. So currently there's about 19 to 20% priced in. Closer to that 5-year, although growing at 20% a year is fairly difficult, especially for a company the size of Apple. Not that they couldn't do it, but even 25%, which is a fairly strong growth rate. So at 25% growth for free cash flow, their fair value would be closer to 276, whereas currently they're at 186. Closer to 20, fair value would be 197, whereas currently we're at 186. And if they earned 15, fair value would be 141, whereas currently we're at 186. So a large amount of free cash flow growth is required for the next 10 years to equal where we are today. So currently there's 19.1 for the next 10 years priced in, which means they have to earn this or even higher to be fairly valued. Looking at earnings per share, we see that based on their tenure of 16.2, they would have a fair value of 148.2, and the stock price is currently at 186.98. So to see what's currently priced in, looks like there's about 19 to 20 currently priced in. Again, versus that 10 years, slightly above, versus the 5 years, fairly on track, and versus the 3 years, slightly below what they've been reporting. If they were to grow at 25 roughly, they'd have a fair value of 270, whereas currently they're at 186. Although that's a large amount of growth, even higher than their last 3 years. If they were to grow at 20, they'd be closer to their fair value today. And 15, obviously they'd have a lower fair value at 138, which is their current one, 186. So pretty hard to say where this could be going. Lots of growth factors involved with the business. We do see that the services are unstoppable with their growth almost. A little bit of risk involved with iPhones, simply because that's one of their biggest business segments. And if there wasn't a disruption in that, as well as the wearables with the iWatch, then there could be some issues with revenue, at least in the short term. So hard to see where the company could be growing to. We do have some business predictability. It's very cyclical with their earnings, but it's looking like it could be around fair value or even slightly on the upper value side. But this is my theoretical framework and assessment of Apple stock, ticker symbol AAPL. Leave a comment below if you have questions or you think I'm completely wrong. If you want a company reviewed, leave a ticker. If you enjoyed the video, please leave a like, subscribe, and I'll see you next time.